The Fed did nothing, basically, but did they really do nothing? Did they signal where they're going?
Well, there was a lot of debate in advance about how much they were going to talk about, for example, what might happen to the balance sheet later on in the year, because that's one of the big changes that's happened, that injection of liquidity into the markets over the last few months. But there was a sort of telling tweak in the language around inflation that they wanted to make completely clear that they were hoping to they wanted inflation to get to the target, not just to be close to the target. And I think that signaled to some that they are moving in the direction of having a slightly more aggressive attitude towards getting inflation back to 2%, which may suggest cuts down the road for 2020.
So let's listen, actually, to what Jay Powell, the chairman, said on that very subject of inflation.
While low and stable inflation is certainly a good thing, inflation that runs persistently below our objective can lead longer-term inflation expectations to drift down, pulling actual inflation even lower. In turn, interest rates would be lower as well, closer to their effective lower bound. As a result, we would have less room to reduce interest rates to support the economy in a future downturn, to the detriment of American families and businesses. We have seen this dynamic play out in other economies around the world, and we're determined to avoid it here in the United States.
So Joe, interpret that for me. Is that saying we're willing to have an overshoot? Is that what that's saying?
I mean, I think there is some willingness to have an overshoot to catch up for a long time of sub 2% inflation. But I think like the long-term change that may be taking place under Powell is a little bit less faith in the models, because I think previously under Yellen and Bernanke, there was this idea, okay, inflation isn't at our goals yet, but the models say it's getting there, unemployment is pushing it there, and so we can start to move to curb it a little bit. And if you look at the press conferences that Powell held at the end of last year, they're getting to be like, maybe let's just see it actually happen, rather than be so confident that just because unemployment is at some level that says we should have inflation, that we can start acting as if it's already here.
Gillian, you have a column in the Financial Times actually addressing this, and we've done a lot of monetary stimulus. I'm not sure we've gotten for it.
Well, I kind of think that people are sort of missing the picture here, because everyone's parsing these words and trying to do the monetary policy version of criminology. But actually, if you look at the fundamentals right now, America has financial conditions which are looser than they have ever been since records started in 1994. That comes from the Fed's own measure, the St. Louis Feds. So the financial stress index is absolutely astonishingly loose right now. You want to know why markets are rallying all around the world? It's because of that. And it's not just because of what the Fed's doing. It's because of Bank of Japan, the ECB. And what's amazing is the Fed has indicated that it's probably going to cut later this year. It's certainly not about to raise. Almost nowhere else is raising right now. And people should be asking, if we've had this much of record stimulus, conditions are even looser than in early 2007, why aren't we seeing more growth?
I mean, it is striking, because remember that long debate we had a few years ago about running the economy hot. You know, there was sort of, would the central bank, would the Fed run the economy hot? I mean, by any measure, we're running the economy hot, but actually we still can't get that inflation. And that is why that language was, although it is criminology, that's why that language is important, is we're saying, look, guys, we are pushing as hard as we can. We are still not seeing inflation come, and we're not seeing capital investment, capital spending pick up, which you might have wanted to see in these kind of extraordinarily loose financial conditions.
Yeah, it begs the question, what economy are running hot? Is it asset value economy, or is it actually real workers out there?
The asset value economy is clearly running hot, but again, I think it comes to this soul searching that's going on inside the Fed and inside economics in general about what really is the relationship between interest rates, financial conditions, and real economic activity. And I do think there's this part of Powell who comes from the business world more than the academic realm. He said it at his last press conference as well, not this most recent one, but previously. It's like, let's see the wage growth. Yeah. Why even talk about full employment or a hot labor market unless we see actual wage growth? And I think, it speaks to this idea. Let's just see it in the data before we start declaring full employment and things like that. There is an important shift going on.
I mean, Powell doesn't eat economic models for breakfast, which is kind of a good thing, frankly, because the leaders who did that for a while haven't got us anywhere great. But something that strikes me is that Powell's done a lot of visits recently to low-income neighborhoods across America. And when you talk to him, he's got this real sense of commitment to trying to make sure that growth is felt by low-income neighborhoods. And conversely, insofar as there actually is wage growth happening today in America, he feels very strongly that you need to protect that and maintain that. And it's very striking because one of the tragedies of what's happening with this super loose monetary policy is that asset prices are rising. That's benefiting wealthy. And meanwhile, it's actually creating a yawning chasm between people who actually are feeling richer and many people in other neighborhoods which are struggling.
Even when real wages are going up at the bottom,
They
have
are,
for a
actually.
few years, and you have unemployment the lowest it's been since the 60s.
Right. And Stephanie, it strikes me that Jay Powell isn't the only non-PhD economist running a central bank. We also have Madame Lagarde, both of them lawyers, by the way, I should point out.
It's a disaster for us economists.
Exactly.
The lawyers are in charge.
But as you look at Madame Lagarde last week, she didn't do anything either, you could say, arguably. But to what extent are their situations different, and to what extent are they quite the same?
Well, it's the same in the sense that they are both entering, or in the case of the Fed, have already a long way through, a basic review of their policy, thinking of some of the things that Joe has said. Have the fundamental relationships changed? Does that mean that we should have a different kind of target? The problem for the European Central Bank is that, at least the Fed has basically met its target. It would like inflation to be a bit higher, but it's got there. The European Central Bank has failed consistently since the crisis to meet its 2% or below 2% inflation target. If you try and rethink your policy in that kind of environment, it's very hard to distinguish what the long-term goal should be from what you should be doing right now. And there's a big disagreement on the Council of the European Central Bank over what to do. So she's supposed to be not imposing a single view. She said she's going to keep everything open. The risk is it could end up being out of her control. Jay Powell knows where his review is going to go. She doesn't know where that's going to end up.
But at least they don't have Merkel and Macron tweeting against them every 5 minutes. That's a blessing.
Yeah, she's best friends with all these people, but then that itself can be a problem. She's a former finance minister. She might be too sympathetic to politicians.
But could it be helpful if she needs fiscal help? Maybe she can deal with these people in a way that other central bankers can't.
I mean, I do think when Lagarde was named as the ECB chief, one very strong argument in her case is that so much of the challenge in Europe right now is kind of on this diplomacy side, right? And kind of, it's like, Germany, spend more money. And given how long she's been on the scene and the relationships that she has with people, regardless of ECB levers themselves, she may be a sort of very good diplomat, so to speak, for that message to fiscal policymakers.
Gillian, is that the answer? Germany needs to spend more money. Would that fix your problem? The monetary policy really hasn't gotten the growth.
Well, in its essence, it really is down to fiscal policy now and down to politicians behaving in a rational way that looks to some kind of medium-term strategy. That's not a prospect that many people in the markets are willing to bet on right now.
So will there be some diplomacy between Madame Lagarde on the one hand and the new head, the president of the EC?
Well, she's been talking to them, and she has been saying some of the same things that her predecessor said. Mario Draghi used to constantly say, and he was quite explicit. He said, look, guys, we're doing this. Last autumn, when he announced, the rate cut, they weren't hoping they weren't going to have to do a resumption of bond purchases. They hoped they weren't going to have to do. They said, look, we wouldn't be doing this. We don't think it's ideal. We wouldn't be doing this if fiscal policy was looser in the Eurozone. We would like to see it looser. Right. But there is a limit. That's about as far as they can go. I mean, legally, they are not supposed to get involved in fiscal policies. They can talk in general terms. Even for Lagarde, hard to be specific. Right.
I mean, there is potentially a get-out-of-jail-free card in all this, which is green, which is right now in Europe. Everybody agrees that there needs to be, green policies, Green New Deal, green investment, green infrastructure, call it what you want. And, it's not the central bank's job to start trying to necessarily call for green infrastructure, but boy, is that politically correct way to talk about the need for more fiscal spending right now. Doesn't work in America. I don't think the White House is about to buy that one, but in Europe,
it's fair.
The hunt is on for something that can be good for low-wage workers, stimulate the economy, and help the environment. And there are a few things that you can do.
As long as somebody opens their checkbook.
And last week in Davos, Kristalina Georgieva, the head of the IMF, was actually saying, listen, maybe green spending and infrastructure is going to be one of the things that actually allows inflation to come back if everyone starts opening the green spigot.